If you want to reach a destination, the first thing you need to know is where you are right now, right? Rocket electric light bulb. Financial planning works the same way. If we don't understand our current financial situation, how can we make better money decisions? Thinking phase. Welcome to Abhik Parth, your go-to channel for financial education, money management, and wealth building strategies. Money Bag Books. In today's episode, we'll uncover white heavy checkmark: how to analyze your financial position. White heavy checkmark: where your money is coming from and where it's going. White heavy checkmark: a practical example to help you apply this concept in real life. So stay tuned and watch till the end. Direct hit. Push pin: why is this step important? Before setting financial goals, you need to know where you currently stand. Many people make money, spend it, and assume everything is fine, until they suddenly realize they're struggling financially. Understanding your financial position helps you take control, reduce stress, and make informed money decisions. So, let's break this process into simple steps. Left pointing magnifying glass. Step 1. Assess your income and expenses. The first step is tracking. Heavy checkmark: how much money you earn every month, salary, business income, side hustles, passive income. Heavy checkmark: where your money goes, rent, bills, shopping, food, entertainment, debt payments. Push pin pro tip: keep a notebook, use an Excel sheet, or try apps like Money Manager or Wallet to track your income and expenses. Left pointing magnifying glass. Step 2. Calculate your net worth. Your net worth is the real picture of your financial health. The formula is simple. Right pointing backhand index: net worth is equal to assets are liabilities. Assets: cash, investments, property, gold, savings. Liabilities: loans, credit card debt, mortgages. Push pin example: if you have 5 lakhs rupees in savings, 2 lakhs rupees in investments, and a car worth 3 lakhs rupees, your total assets is equal to 10 lakhs rupees. If you have a 4 lakhs rupee loan and 50,000 rupees in credit card debt, your total liabilities is equal to 4 lakhs 50,000 rupees. Your net worth is equal to 10 lakhs rupees to 4 lakhs 50,000 rupees is equal to 5 lakhs 50,000 rupees. The goal: increase assets and reduce liabilities over time. Electric light bulb. Left pointing magnifying glass. Step 3. Identify spending habits. Are you spending more than you earn? Be honest. Are you saving at least 20% of your income? Are you living paycheck to paycheck? Do you spend on things you don't really need? Push pin practical example. Imagine 2 friends, Amit and Rahul. Amit earns 50,000 rupee per month but spends 55,000 rupees. He uses credit cards to cover his extra expenses. Rahul earns 40,000 rupee per month but spends only 30,000 rupees. He saves 10,000 rupees every month. Who is in a better position? Thinking phase clearly: Rahul. Even though Amit earns more, his spending habits are leading him toward financial trouble. Electric light bulb lesson: it's not about how much you earn, it's about how well you manage it. Public address loudspeaker. Final thoughts. Understanding your financial situation is the first step toward financial success. Once you know where you are, you can make better plans for where you want to go. Rocket. Speech balloon. Comment below. Do you track your expenses? What's your biggest financial challenge? Let's discuss. Public address loudspeaker. Subscribe to Abhik Parth for more financial wisdom and take control of your money today. What do you really want from your money? A dream home? Financial freedom? A secure future for your family? Thinking face electric light bulb. The truth is, most people don't have clear financial goals. They save randomly, invest without direction, and then wonder why they aren't financially successful. Welcome to Abhik Parth, your go-to channel for financial education, wealth building, and smart money strategies. Money Bag Books. In today's episode, we'll discuss White heavy checkmark. Why setting financial goals is crucial. White heavy checkmark. How to define personal and realistic financial goals. White heavy checkmark. A practical example to apply this concept in your life. So stay till the end. Rocket. Left pointing magnifying glass. Step 1. Understanding why goals matter. Most people live paycheck to paycheck because they don't have a financial roadmap. Direct hit without clear goals, you are just drifting. Think of your financial journey like a road trip. If you don't know the destination, how will you decide the route? The same applies to money. Without goals, you can't make the right financial decisions. Left pointing magnifying glass. Step 2. Defining your financial goals. Your financial goals should be heavy checkmark specific, not just save money, but save 5 lakh rupees for a house down payment. Heavy checkmark measurable, set a clear amount and deadline. Heavy checkmark achievable, realistic based on your income and expenses. Heavy checkmark relevant, aligns with your life priorities. Heavy checkmark time bound, has a deadline. Pushpin example. Instead of saying, I want to be rich, say electric light bulb. I want to save 10 lakh rupees in the next 5 years for my business. Left pointing magnifying glass. Step 3. Breaking goals into short-term and long-term. 1 keycap short-term goals, 0 to 2 years. Heavy checkmark paying off credit card debt. Credit card. Heavy checkmark building an emergency fund bank. Heavy checkmark saving for a vacation globe showing Europe Africa. 2 keycap medium-term goals, 3 to 5 years. Heavy checkmark buying a car automobile. Heavy checkmark investing for a down payment on a house with garden. 3 keycap long-term goals, 5+ years. Heavy checkmark retirement planning beach with umbrella. Heavy checkmark child's education graduation cap. Heavy checkmark wealth creation money bag. Pushpin practical example. Meet Neha and Rohit. They both earn 50,000 rupee per month. Neha spends randomly, saving whatever is left at the end of the month. She often withdraws from her savings for small expenses. Rohit follows a goal-based plan. Small Blue Diamond saves 5,000 rupee per month for an emergency fund. Small Blue Diamond invests 10,000 rupees for a home down payment. Small Blue Diamond puts 3,000 rupees into retirement savings. Pushpin. Who will achieve financial security first? Thinking face clearly, Rohit. Electric light bulb lesson. When you attach a purpose to your money, you achieve financial success faster. Public address loudspeaker. Final thoughts. Start by writing down your top 3 financial goals today. Break them into short, medium, and long term. Then, start working towards them step by step. Rocket. Speech balloon. Comment below, what's your biggest financial goal right now? Let's discuss. Public address loudspeaker. Subscribe to Abhik Parth for more practical financial tips. Let's build wealth together.